What's up, YouTube? My name is Allison and this is my YouTube channel. Today we're going to discuss the top terms you need to know for any beginner trader that are easily understood, that even my 10-year-old can get them. All right, guys, welcome back. Just a fair warning, I'm going to use a whiteboard today and a marker. I do have some video editing software downloading for future videos, but to start, I also think it's a lot easier when you can see the term or the symbol right in front of you and you can kind of understand these terms, because taking all this information in the beginning can be really overwhelming for some people, especially if you've never learned the stock market or you have no idea what you're doing, which was me, definitely was me, and still me. I'm still learning. So I think every day is a learning day in the stock market for me. So the first term I want to go over is Dow Jones. In the beginning, it was really confusing for me because I would see on the news like Dow Jones is down 30 points or it's down 50 points. And I didn't understand that because at the time I invested in smaller companies. So my stocks and in my portfolio were up. So I kind of thought to myself, like, how could the stock market be down if my stocks are up? So the Dow Jones bases its information, it's an index, and they base their information off blue chip stocks. So they base it off the largest stocks in the industry or companies. And that is how they determine, which direction the stock market is going. So typically when the Dow Jones is down, that means that those large companies, the blue chip stocks, which I'll go over next, they're falling down. So they're declining. When they say it's up, it's, those large companies are going up. So it doesn't necessarily take into account the smaller companies. So just understand that in the beginning, when you are trading, that is something you do need to watch out for as well and understand what it means. So that brings us to my next term that I want to go over, which is blue chip stocks. So blue chip stocks are all your large companies. So your most profitable, typically the ones that are financially stable. They've been around for a long time. Some examples would be Apple. I think Microsoft is in there, AT&T, you've got Lowe's. Those are all considered blue chip stocks. So they are stocks that are probably not going to crash. Nothing is certain in this world, but that is what they are referring to, or that is the stocks that they use when they get their averages to know if the Dow Jones is going to be up or down. The next term I want to go over is a bull market. So a bull market is referring to a market that is increasing. So that means that stocks are, rising, they are going upward, the market's strong. You can either buy or sell in a strong market. It honestly, all of that just depends on your strategies you use. So just because the market's strong doesn't mean you can't buy in. We'll go over that in a couple other videos that I'll come out with. But a bull market is referring, or you'll hear them say it's bullish, and they are referring to the market as strong. So the market, most stocks are going upward. The next term we are going to go over is bear market. It's going to be an opposite of a bull market. So if the bull market is going up, a bear market is more than likely going to mean it's going down. So you'll hear people use bearish, which in every investor is totally different. I typically buy in a bearish market, or when stocks are going down, my certain list of stocks that I have, you can make money in a bullish market and in a bearish market. It all depends on the strategies you use and how you go about trading or investing. So when people refer to a bear market, they are referring to the market being risky, it's got higher risk, the stocks are going down, so kind of choose wisely. Sometimes this triggers a sell-off, which a lot of people get scared. If you are in strong blue chip stock companies and the market is bearish and those companies are going down still, a lot of my long-term investments, I know eventually they'll go back up, so I typically stay into those stocks. But everybody is different. So in a bear market, a lot of new investors get extremely scared. They, sell off a lot of their stocks because they don't want to lose a certain amount of money if they've got them in like shorter company or smaller companies. And that normally triggers a sell-off. So that's when you'll see a stock like start to go down just a little bit, but then it like completely drops. So a perfect example would be GameStop. So GameStop was going crazy high. I did jump in on that stock trade. I only day traded it. I didn't keep it overnight because I knew that it was going to extremely decline at some point. And when it does, people were going to panic, and it wasn't just going to decline by a couple cents. It was going to decline by like hundreds of dollars quickly. And I'm pretty sure I did that. So I'm glad that I, jumped out when I did. I made my little extra money with it, and that was it. But anyways, back to the subject. So a bear market is going to be the opposite of a bull market. It's going to be when the stocks are going down. All right, guys, so the next term I want to go over is a market buy. So when you first go into the stock market app or whatever platform you're using to trade on, you're going to notice that when you go to make your first buy, a stock could say it's at $25, right? So let's just take, for example, $25, you want to buy this share. And when you go to swipe up or you hit enter, or whenever you go to actually place that market buy, let's say the bids at that time are going for $25.60. You're going to buy that share at $25.60. So you're not guaranteed to get it at $25, even though at the second that stock is going, you're thinking it's selling for $25. It's really not. It's selling for $25.60 or whatever the bid is at that current moment when you hit enter or you hit buy. So a market buy can be risky, especially if you're day trading or you're buying a lot of things. In high volume stocks, it's not too risky because typically when you're day trading, you're buying the shares very quickly and then getting rid of them. But for a person who, has a set price, or if you look at stock charts and stuff like that, you're not going to want to really do market buys. I preferably like to stick to limit orders. So that brings us to our next term, a limit order. So a limit order, let's say I wanted to buy that share at $25. What I'm going to do is I'm going to set a limit order in my platform. So every platform is different. I just started Webull as well to kind of get to know their platform so I can help with videos for that app as well. But I typically trade with Robinhood. I only do Robinhood because I can take it everywhere that I go. I am a busy mom, so I'm constantly on the go, and I like the fact that I can take Robinhood on my phone. But a limit order is going to be, let's just take, for example, a share at $25. So you want to buy, let's just say Tesla. You want to buy Tesla at $25, but Tesla is at $25.80 right now. Or like I said, you don't want to take the risk of doing a market order because the volume is high in the stock. So you don't want to kind of get screwed of paying more for a stock than what you want to pay. So if you go to your limit order, what you can do is you can set it, okay, I want to buy this stock at $25. So when those bids drop down to $25, your order will automatically be placed, and you will own that share at $25. So especially when you're buying bulk or it's your first trade, like it's very confusing when you go to swipe up and it says $25.80. That had me totally confused because I was like, hold on, I did not pay $25.80 for this share. So, through my research and whatnot, I learned to do a limit order. So I knew exactly what I was buying each share for. And I did have like a little notebook that I would write everything down, which really helped me out. I would say 10 shares at $25 or 10 shares at $10, 20 shares at $30. So I do suggest also doing that because it really helps. That brings us to our next term. We are going to talk about volatility. I say it like that because I hate saying that word. I absolutely feel like I say it wrong every single time. So you're going to notice this on a lot of apps too. They will tell you if a stock, has a higher risk or a lower risk. And basically what this word means is it is how quickly a stock can move up or down. So if you have, let's say, Tesla, and Tesla one day is like $890 and the next day it drops to $820, the volatility, oh my God, I can't say the word. The volatility on that stock is extremely high because it goes up and down, up and down, up and down so quickly that it is also very risky. So it's risky for new investors. It's risky for people that don't understand the market. If you do understand the market, I do have a couple stocks that I do day trade with, and those stocks, super high risk. But if I look at the charts on them, I know that when they always go up, they always go right back down. So I typically buy in when they're down, I sell when they're high. So some of those stocks I do like to play with, but just anyone who's really interested in wanting to know the stock market, I want to help because I wasted probably about $1,000 on all these courses that don't help. And I want to educate my son in the stock market so he understands everything he's doing in the stock market. And so he knows the importance of investing. So if something was to ever happen, I feel like jobs are not promised at all these days. They don't teach this in school. They don't teach investments in period. And I think it's something that should be taught. So my whole goal with this YouTube channel is to just help and, you know, reach out to people that don't understand the stock market. And I will be doing some future videos on like options trading, day trading. There are some minimum requirements for day trading. So please don't start an account and just think you can immediately day trade. You do have to fund your account with $25,000. There is some ways to get around that, which we will do another video on as well. But yeah, so I think the only really other important term that, it's not really a term, but something that I would definitely say, you know, stay focused on is the analyst rating. An analyst rating is basically a rating on that stock from the analyst or professional people, and what they think that stock is either going to be a buy, a hold, or a sell. I do own some stocks that they say are a sell that I don't feel like are a sell, so I will keep them. But like I said, everybody is different. Ultimately, at the end, you choose your stock. You're going to choose what you want to invest in. And yeah, you can, you know, follow the lead of other people that tell you what stock to buy and what not. But my whole thing is invest something that you're comfortable investing in, especially when you're first time trading. Because I feel like that is what's going to make you successful. There's a lot of stocks that people were like, I would watch out for that stock, but I did my research on the company, so I knew they were strong and they paid me. So I made some good money. Yeah, I think that's it. So if you guys have any questions or you want to see me do a specific video or want to talk about a specific trading strategy or term, you can leave me a comment below. I did put my Instagram link on there. My Instagram name is The Single Mom Investor, not just for single moms, but that is just kind of what I called myself. I thought it was pretty cool, and I liked it, and it stuck, and people seem to like it. So yeah, guys, like, comment, and subscribe, and stay tuned for more videos.